and welcome to the monthly equity market outlook from Centrum. Equity markets have obviously been a little bit of a turmoil. I don't know if that's the right word to use, but a tailspin maybe. We've seen a correction of about 4,000 points from the peak, 26,200 to now 22,200 as we speak. Investors are kind of worried. We have not seen pull out from mutual fund SIPs from retail investors just about yet. But the FII pullout has been fairly significant, right? I mean, essentially about $10-11 billion worth of outflow in the month of January itself has essentially what has led to this carnage. But I think the point here is that things are always going to be tough. And if you look at the last 20 years sort of a history, we've seen one thing or the other cropping up every few years, right? It started off with the global financial crisis, we moved on to demonetization, to then the COVID crisis happening. And these things are usual, right? Everything in life tends to be a little bit of cycle. Otherwise, there's no fun in it. And what we need to do as investors is to swim against the tide, to keep our mental balance and health intact when everybody is losing theirs all around you, and invest when everybody's selling. So the simple rule of making that extra delta in equities is to buy when everybody's selling and sell when everybody is buying. When everybody around you is bullish, that's the best time to sell. But when everybody is despondent around you, when they are like today, it's the best time to buy. When you look at the bottom-up analysis of the market today, stocks have witnessed a very significant correction. And these are very high-quality stocks that we are talking about, where you are witnessing 20% plus earnings growth in the next 2 years, 3 years, which are now available to you at less than 0.6, 0.7 times price to PEG, right? Price to earnings growth. And that's the opportunity that you need to take. The orientation of the market has turned so much towards value that so many stocks are available to you today, which are deeply embedded in value, that this is the time to move money from other asset classes into equity and don't be sitting on cash. Don't even think about redeeming anything today. Don't even think about selling anything today. You need to show your conviction. And I think the point here is that when you look at it from a macroeconomic perspective, when you look at it from a government action perspective, and when you look at it from an earnings growth perspective, I think we are by and large at the bottom over here. Third quarter is the worst, and I do think that directionally fourth quarter is going to be better. And by first quarter of next year, we are going to go into a double-digit earnings growth. From government's perspective, we've seen two major decisions coming through. Number one is a tax rebate that we saw in the budget, which is going to boost consumption significantly, and that will have a ripple down effect. Number two is RBI cutting the rates by 25 basis points. I don't think there's going to be the last of it. We'll see at least 2 more rate cuts happening in this current calendar year. This should be a positive. This should give a positive impetus to the overall economy, consumption, credit growth, everything. And from a flow perspective, I don't think FII flow essentially has mattered all that much to India in the last 3 years. We've seen the worst of it. But the fact of the matter is, given the fact that internationally most of the bad things or all the concerns or the red flags are already out there in the open, I think that's closer to getting factored in now. Whether it's a tariff war, whether it's the Trump government coming to power, or whether the bond yields moving up, I think by and large we've seen the worst of it. So my sense here is that when you look at it holistically from every perspective, I think we are by and large at the bottom today, and it's a great time to invest. So do not get despondent, do not fear, be bold, show your conviction, and put your money in equities. Happy investing.